All right. Hello. Good afternoon, everybody. Welcome to our midday update for Tuesday, September 13th. This is George Papsoff from Trade Pro Academy. Would like to welcome you to another day of carnage in the market, it seems. And while a lot of market traders or market participants are getting fearful, we got to be prepared for this stuff. All right. I understand some of the price action came back in our favor here or in our face. And we're going to discuss it, what this means and how to take advantage, because we got a transitional moment. And if you're not recognizing this moment, you could be in deep trouble. Number one lesson I want to give you guys right now is stop buying the dips and holding on to them. It's not going to help you one bit, not in this market environment. Okay. A lot of traders want to get in there and marry their positions, but that's not the way to go about it. Usually when we have a downside transitional moment like that on Friday, the carnage has been laid. The blood has been spilled. It doesn't matter that we had a sharp recovery. I know yesterday a lot of people got suckered into buying into that high and saying, oh, we're going to recover this thing, go to 2,200. Do not do that. That is the least desirable outcome you could have taken, it, or least desirable action in that level. Look what we talked about yesterday. We said we drew this line with our Trade Pro Earn Package subscribers, and we said 2160. This is the line right here they have to defend. Why? Because it was support structure going into late July, and that popped upwards, retraced, tested it again. But for goodness sake, how many times are we going to hold 2160? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's a counting exercise. And trend lines do not get stronger the more times they are touched. I don't care what textbook you listen to or who you talk to. The more touches you get of a trend line, the greater the odds are of that trend line breaking. Because how many times are you going to hold it? At one point, you're going to lose that battle. That battle was lost Friday. Yesterday, price came right back into it, and guess where we failed? Right there. Now we got another down day, and we're making a run at these lows. Today, really what the goal for the bears will be is to come in here and smash these 2122s. Okay, we got to get below this on the index. That's going to be a key goal. Another outcome is we could bounce around here and hold some of this as support for the day. But I think in today's afternoon session, we make a run at these lows. There's absolutely no area for here that you should be targeting along. None, zero. Okay. I mean, the day opened up today at, where are we at here? 9:30 in the morning, and they just absolutely stepped on it. I get there was a lot of upside. Europe resumed the selling. Okay. And then just down it goes. Right now, your trading strategy should be to sell rallies. All right. Yesterday, I tried that same strategy, and I always talk about my losing trades as much as I talk about winning trades. Shorted it here, shorted it there, started losing money, rolled in, and just bought the thing. You can't fight this. If you're going to fight it once, fight it twice, fight it small. If you're going to fight a trend, the biggest rule that I have for myself personally is fight the trend small. All right. And I'm going to show you what I mean. Let me just attach my pen here. I had a meeting that ran a little bit late. Not as well organized as I'd like to be at this point, but I'm still here with you guys. All right, here's what I mean. Fight the trend small. Okay, let me show you on the chart. If you're coming in here and you want to buy a dip, go for it. No one's going to stop you. I'm not going to be the one to tell you what trade you shouldn't do. Buy it, but realize you're fading. When you're fading a trend, have a short leash. Have a target that's maybe 1 to 2 to 3 points maximum. Take your profit. If you have a profit when you're buying into a sell-off, be happy with it. All right. But the bigger trend and the bigger opportunity is short these rallies. Don't short them here. Let me zoom in a little bit. Don't short the rallies as soon as you see a green bar and say, oh, it's going to go down. Wait for some definition and price structure. Wait for some failures. If you couldn't pick a short here, pick it here. You could see new lower highs are starting to come in. All right. We knew this low was going to get smashed. I traded this. This morning I said, you know what, we're going to have a down day. I said that early, and I just started leaning on it and shorting into rallies. Done well today. Okay, did terrible last week. I'm recovering this week. I'm actually all the way back. Now, is this 21.24 going to hold? Who knows? But remember what I said. If you're going to go long, take a shot long, small. Put your stop below 21.24. What are we at? 27 right now. You're taking a 3-point risk, but you got a lot of upside. You can get up to 21.40 if we get a lot of shorts trapped. So before you get into a trade, plan your exit points. Try it, but get out quickly, because at any point, it's one of those things like whack-a-mole. You could poke your head out, look around, and whack, you get hit lower. In a market where heads lower quicker, that's the right side. And sometimes traders ask, how do I know the right side? And you could do your research for thousands of hours, and this is one simple trick. Wait for the open, okay? Wait wherever the price opens here, and then just stalk the price. Basically, this was the 9:30 open. We had a little bit of a pop. Okay, great. I was long for that pop. Took a loss. Then I started shorting into it. If it's not strong on the open, it's going to be weak. And if it's weak, maybe sit the first 15 to 30 minutes out, 9:30 to 9:45-ish to even 10 a.m. Sit it out and just watch the price action, and it will tell you where it's going. If it's rallying slowly, I don't care if it went up 10 points slow. If it got whacked 5 points quickly, that's the right side. So pay attention, not just the direction, but one of the most helpful indicators is velocity. How quickly is price moving? Velocity is a bigger tell sign than indication or direction, rather, on a smaller time frame. Okay, that's a 15-minute. So we're challenging these lows. I think we pop them. I think we break those lows and head lower today and close the session at 21.15 or so. So we got another probably 10 points to go. Okay, don't just blindly short the lows, though. Wait for a pop on a 15-minute chart. If you want to get short, now's not the time to do it. Wait for it to come back up to 21.30. Understand what happened here on a 15-minute candle. We had a huge up bar, and then immediately after it got smashed. Imagine being the guy that bought it here. Worse yet, imagine being the guy or lady that bought it up here. What happened to you? You got punched in the mouth, and it hurts. And you probably got to go see the dentist to do some reparative surgeries. That's how you got to see this market. It ain't a pretty game. All right, I'm tired of people saying, oh, well, it's going to go down. You're going to make money. You're making money because you're taking it from somebody else. Right now, everybody's selling. Here's a one-day chart. Okay, a lot of volatility. I prepared my Earn Package subscribers at Trade Pro Academy for this type of price action. And, I mean, some of them are here right now. They're listening to the webinar, and we're going to look at our positions right after. But we were preparing for some volatility in here, all right? Yeah, I took a short up top. Yeah, I bought it here. I bought it here. But I immediately canceled that plan below 21.70. 21.60 held, started shorting again this morning. So you got to have analysis, and it's got to work for you. Right now, I'll tell you a few technical things you got to watch for. This 100-day moving average, let's see what comes into play here. All right, we're right at it. If we break below, sell stops are going to start coming. Imagine this market as a transitional thing where one person loses and one person wins. Right now, buyers have been winning. They've been winning. Okay, they've been winning the battle. Below this line, you've shaken out all the buyers here. Okay, now these buyers start to get nervous. Think about that. If you bought here on April 14th and you're a buy hold investor, you're starting to get a little nervous. You just saw a whole bunch of profit evaporate. And what happens when you see a whole bunch of profit evaporate? You're going to start to tighten your risk. You're going to say, I had my risk down here. I don't like this move. I'm going to move my stop loss here. These guys, they might be a little bit more patient. They'll probably put their stop losses down here. So what ends up happening is an accumulation of stops hitting these levels. So it's no surprise that if we go down below 21.15, if we hit 2100 and we break below it, it's not going to do one of these and hang around here. It's just going to go whack right through it. So trade those levels. Here's your levels you got to watch for this afternoon. First of all, this low on the S&P 500, 21.23. It's got to defend it. It's got to defend it right now. It ain't looking good. Sellers are piling on as I look at my other chart here. It's not looking good. Can there be a bounce? Absolutely. Are you going to buy it right now? Definitely not. Not if you're a trade pro, you're not buying it. Okay, you're looking to sell this thing. You're just looking for a good opportunity. Don't feel like you missed out on anything. If you feel like you should have been short up here, great. In hindsight, everyone should have been short up here and would have been short up here. Ask yourself, what now? What now? Are you still short? Yes. Wait for a rally, dip its head back under the water. If you're looking to get long, wait for this level because this 21.20 is going to make one attempt, maybe a second attempt. Flip on the hourly chart. Look at who's got the leash. Buyers retraced it on some volume. Sellers came right back in, punched them in the face on high volume. Momentum's rolling over. We got more downside. Rolls off right off of this 100-day moving average. That's just the S&P 500. Okay, let's look at a few more things quickly. Let's look at CL1, which is oil. All right, oil, I'm not trading it right now. Could have been short. Could have, would have, should have, didn't. Around the 47 halves. Could have been short the 48. I was chomping at that bit for a while, saying short oil 48s around this price structure. Didn't do it. All right, point is, careful for oil too. Oil is a very big ancillary. If oil breaks through this support, it's going to drag equities down with it. All right, one of the surprising things that's happened here is bonds have also got crushed. Okay, typically bonds go up when equities are weak. That has not happened. That all has to do with Federal Reserve and interest rate expectations. Yesterday, we got Brainerd to come on the wire. She's a governor on the board. She's a voting member, and she says, "Oh well, you know what? We don't think it's time to raise rates yet. we haven't seen the things we're looking for. You got to know she's a dove. She's a notorious dove. So what a convenient place to shovel her in yesterday on a low when the Fed says, well, let's get her to speak. The market pops on some of her commentary, and now that just gets faded. Because here's the truth. She's a dove anyways. Is that she came out and says, we don't want to hike rates. That's always been her stance. Now, if she came in, if you brought in a Fed member who said, you know what, I'm hawkish, I want to raise rates, and they said, you know, I don't know, the case has changed here with the market dropping so much. I don't think we should raise rates. Market's going to skyrocket and blow out that 2,200 in one day. This is no longer an economic-driven market. If anyone's still trying to trade the economy, stop trying. Okay, the economy is detached from the market. What you're trading right now is a central bank. You're in the middle of the central bank trade. You have been since 2009, which is something you should know. Since 2009, you've been trading central banking. It's getting ridiculous. I know. How long will it go? I don't know that. I just know that at some point, something's got to give. And that some point's going to come soon. All right? You're trading the Federal Reserve. Forget about what jobs numbers means for the economy. How many people are employed? What's their spending like? What's their debt levels? How confident are they? How satisfied are they? Nobody cares about that. Not the market. They don't care about that. All it cares about right now is its next dosage of crack, which is the Federal Reserve. Okay, I'm giving it to you guys straight. I don't want to sugarcoat this stuff. That's what's happening there. If you want to look at some markets on gold, I'm really bullish on gold. I'm hoping it holds this 1320. Let me change my terminology here. Not hope. Nothing good comes out of hope in trading. I'm seeing and looking for this 1320 to hold for a bounce. If these markets continue to slide, more people will sell the S&P 500. Because ask what's happening right now. There's a lot of money leaving equities. There's a lot of money leaving fixed income. In a traditional portfolio, in a conservative approach, there's a 60-40 split, 60% long equity, 40% long fixed income to balance it out. Okay, in a balanced portfolio. Well, if both of these things are going down, wherefore is the cash going at the moment? Nowhere. That's where. So I expect them to start plowing it into gold, plowing it into the US dollar and silver. I expect to go up as well in the near future if this downside continues. All right, look at volatility. I'll walk you guys through this. Downside day on volatility. Now we got a bounce. I wrote a blog post actually 2 weeks ago where I took the long volatility trade. Everyone thought it was nuts. You see the comments I got on that. Like, are you crazy? Volatility is so low. Well, I drew a green box to defend myself. And I said, it might be low. I agree with you. I just think it's too low. We're coming into seasonal volatility. We have a presidential election. We have a September hike. And the market's up there. The S&P 500 sleeping up at 2180 like there's no damage or nothing could go wrong. Well, it could go wrong. You know, I'm watching the documentary Narcos, and when he was at his top, that's when the worst things happen. Okay, when you're at your prime, at your peak, at your biggest point of profit, that's your biggest point of risk as well. And there came the inflection point. So guys, careful trading this. Don't be getting long and holding, or you're going to end up holding the bag. If you're going to get short, wait for a pop, and also expect the other possible alternative that we just sit in this range. It's been very volatile in the morning. We might just start to coil in and just fizzle out and wait for more direction. That's what's happening. No more Fed speakers until the FOMC meeting next Wednesday, so you don't have to worry about that. From an economic standpoint, in terms of numbers, even though I just told you the economy doesn't matter, but from a numbers standpoint, here's what you're looking at. September 13th, actually, let's go the whole week. This is forexfactory.com. Everyone asks me, where do I get my data from? forexfactory.com. Bloomberg, they have a great economic calendar for speakers, and also Financial Juice. Strongly recommend that website. Free squawk, 10-second delay. Okay, back to this. What are we seeing here? Nothing for the rest of the day. We got nothing. We got a 30-year bond auction at 1 p.m. If you're a fixed income trader, that's super important for you. If you're not, who cares? Federal budget balance, none of these are high impact indicators. Tomorrow, what we have, though, is a little bit more of the same. Starts to pick up crude oil inventories at 10:30 in the morning tomorrow. All right. Tonight at 4:30 p.m., we have the API data, which is private subscriber release. Costs a ton of money. I don't own that subscription, but the squawk will come out 1 or 2 seconds after the numbers release. Okay. Financial Juice does it 10 seconds later. Crude oil inventories tonight. Tomorrow, we're looking to see what happens at 10:30 on the crude oil inventory number. I'll tell you this much. They had a huge draw last month. Massive draw. That means there's a lot of supply coming in, or equal supply and more demand, or less supply and equal demand. It means there's more oil being lifted than is being stored. Let's see what happens. There's an expectation of a build or an oversupply of the market at 2.8 million barrels. If we get anything below the expected amount, oil's going to pop, and you got to know that. That's the oil trade. If we get anything above, oil's going to drop based on oversupply. I'll tell you right now, it's probably oversupplied. Iran's pumping at a record amount. Iraq's pumping at a record amount. Iran wants to increase their production. Saudi Arabia is increasing their production and maxed out. So is Russia. All these people are pumping at record pace. And this meeting next week that they're talking about between OPEC and non-OPEC, absolute horse, you know what? Nothing's going to come out of it. All right? Let me tell you this. If you had a girlfriend or a boyfriend and they started spending some of your money, you gave them your credit card and they started increasing their purchases, and you confronted them about it, and they're spending $10,000 a week on your credit card. And then they say, I'll tell you what, honey, I'm going to stop spending more, but I'm going to keep it at 10,000. What do you think? How's that going to pan out for you? Good luck. Good freaking luck. That person's going to get cut off. Same idea here. They're not going to freeze because they're already pumping at record highs. They can't pump anymore. So a freeze at a record high is actually bearish. But as with anything oil, there's a lot of algorithms. There's a lot of downright crooked action in there. I don't want to speculate on that. But what I'll tell you is this for oil for tomorrow, and we'll end it here, is the following. All right. Oil, you buy the rumor, sell the news. By the time it actually gets released, sell into that. Everyone's already long. There's some stops waiting to get hit. Hey, guys, good luck. Trading the rest of the afternoon. I don't know if we're going to do another update for the rest of the week. But if you want to join or subscribe, join us, tradeproacademy.com. Our Earn Package subscribers, $79 a month, and you get the benefit of having daily midday updates, some live trading occasionally, and Sunday webinars plus trade setups. Okay? You go in here, go pricing, and $79. It's all it is a month. You spend more than that on your cable bill, and when's the last time your cable bill is paid? Have a great session. We'll cut off some of the YouTube friends. All the best. Good luck. Email us if you have any questions or want to sign up. Follow the link that right there is on the page. And now we're going to cut it to our subscribers and look at our individual trades. Take care, guys. Have a great day. Subscribers, hang tight.